I found an ETF that pays dividends every month from Bitcoin exposure. Is it a buy? This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. BTCI, a NEOS ETF, is the latest competitor to another ETF we covered recently on this channel, which is SEPI. BTCI started trading on October 17th of 2024. It is a monthly dividend ETF with a fee of 0.98%. The prospectus allows for a bit more flexibility than you would see in their holdings, so I'm going to give you both what they can do and what they are currently doing according to the holdings that I pulled. Per the prospectus, when you invest your cash in a BTCI, they put 80% of that into some sort of Bitcoin exposure, primarily through some form of ownership in Bitcoin ETPs. That's going to be your spot ETFs or any other ETF that deals in Bitcoin. The prospectus did also add in language that allows them to use a foreign subsidiary in the Cayman Islands to gain indirect exposure to Bitcoin ETPs. I'm not sure why they would bother doing it that way when they could just buy a lot of these directly on the exchange. Then to generate their monthly income, they will do some sort of a covered call strategy, whether it be covered call against their own direct shares that they own in a Bitcoin ETP, or they might decide to do a synthetic covered call approach against a more desirable ticker or an index. According to their holdings, they are currently doing this covered call strategy as a synthetic approach against the MBTX, which appears to be a mini Bitcoin index. So any income from those premiums or net premiums should be able to pay for the dividends and their fee. And as far as what they're currently holding, they are currently holding the VanEck Bitcoin ETF, ticker symbol HODL. On the date of the holdings that I pulled, they actually violated their 80% rule. They did not have 80% of their holdings in some sort of Bitcoin exposure. They, in fact, actually had 72.97% of their holdings in U.S. Treasury bills dated for June 10th. I pulled those holdings again today on May 2nd just to check and see if maybe that had changed, and it actually went up to over 74% of the holdings in U.S. Treasuries. The current option strategy looks something a bit more like YieldMax doing their single stock ETFs. They have a sold put, they have a purchased call, and 2 sold calls. Normally, an ETF violating its own prospectus is cause for alarm, but they are still beating their competitors as the charts will show. Since inception, its price return is 13.9%, but its total return is 34.8%. And when I compared this in Seeking Alpha to SEPI and YBIT, it actually beats SEPI and YBIT in total returns on the 1-year chart from BTCI's inception date and the latest inception date of all 3 ETFs, which would be SEPI's inception date. So a case could be made for if it ain't broke, don't fix it. What do you think? Is BTCI a buy? Let us know in the comment section down below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.